Now, every trader has a list of priorities, things that they value more than other things. And as human beings, we spend money according to what it is we value. If we have a very high value on health and fitness, the moment money comes into our bank account, we are going to spend money according to what we perceive will give us the greatest advantage to our health and fitness. So that may mean going and buying supplements. That may mean paying for a gym membership or some sort of something that contributes to your health and fitness. That's where your money is going to go. And so money comes into the bank account and then it gets spent according to what you value. Why? Because some traders or some individuals perceive that putting their money towards developing their health and fitness is of more value to them than cash in the bank. Or you may have a high value on your family and relationships. So the moment money comes in, you're going to spend money according to whatever you perceive will give you the greater advantage to your family and relationships. Maybe that means dinners, or maybe that means paying for your kids' education, or whatever it may be, a family holiday. Money is going to get spent according to what you value because you perceive there's more value in that, converting the cash into that form than keeping cash in the bank. So every trader has a list of priorities and you spend money according to what you value and according to what you prioritize. So let's go with that example. Let's say, for example, you have a very high value on health and fitness. The moment money comes into your bank account from, let's say, trading profits, or from, for this example, you start generating trading profits from your prop firms, they pay you out, and the money comes into your bank account. Now, if you have a very high value on health and fitness, you're going to go and spend money according to that, and you're going to maybe go and buy some supplements and that type of stuff. And let's say you do that, okay, and you transfer your money to an individual who has created a supplement store, and they're providing a product or service, a supplements to you, which you value more than the cash form, so you exchange cash for the supplements. Okay, now let's say that individual that you've just transferred with has a very high value on learning and personal development and books, and maybe they go off and, because money comes into their bank account, they then go and spend money according to what they value, which maybe is a new seminar or a new book, from someone that they perceive they're going to get value from, and money comes into their account and they have a high value on something else. Let's say, for example, they have a high value on showing off and having a nice car or a Lamborghini or something like that. So what they're going to do is they're going to go to the car dealership and spend money according to what they value, because they perceive more value having a Lamborghini than cash in the bank. And so money flows in society according to what you value. Money comes in. If you have a high value in health and fitness, it's going to go and flow into that, and you're going to get health and fitness product instead of cash in the bank. And then if the individual who makes money off that has a high value on the personal development, they're going to go and spend it on someone they perceive they can learn something from, and then that individual who has a high value on a new Lamborghini, for example, is going to go to the dealership and spend money on that car because they perceive more value in having that car than they do cash in the bank. Now, let's say, for example, the owner of this dealership, right? Let's say they get all the money, just for this example's sake. Now, the owner of that dealership, if they have a high value on, one, saving cash, and two, buying income-producing assets, and three, growing that and reinvesting and growing their investments, then guess what's going to happen? The money's going to come into their bank account, but because they have a higher value on saving and investing beyond anything else, beyond buying any other consumable products, guess what? The money then gets invested and compounded, and it creates more of this flywheel where money flows in society from those who value it least and value other things more, to an individual who values money, the action steps of money, saving and investing, and it flows to that individual, and then it doesn't leave their pockets because it goes into their accounts and they invest it and they reinvest it and they grow that. And yes, they may have a little bit of money that goes out for expenditure, but most of their money gets spent according to what they value is saving and investing into income producing assets and watching that compounding grow. So the reason why you will stay poor as a trader and why most traders, despite making money, don't have anything to show for at the end of the year, at the end of their life, is because they value other things other things besides these action steps up here, and they value other things more than they do those action steps. So the moment that money comes into their account, it gets spent according to whatever they value. And you can have a look, you can go through your bank statements and your bank transfers, and you can see all the things you spend money on, and whatever is most consistent there is going to give you an indication of what you value most and what you value more than cash in the bank. So as a trader, you have to have an understanding of human behavior and value systems and priority systems, and recognize that your brain is constantly filtering out value in its environment, and you're going to spend more money according to what you value because you value that thing more than you do cash in the bank. And that's why most traders will stay poor. So what you have to do as a trader is you firstly have to become acutely aware of what you value by observing your actions of where money flows, and when money comes in, where does it end up? That's going to give you an indication of what you value. And then what you also have to do, if you want to keep money in your pocket, you have to raise the value of the following tasks: saving a portion of your income. 2, investing a portion of your income into income producing assets, things like stocks, index funds. These are all things that you can buy that then pay you out a dividend. And then number 3, reinvesting those dividends and watching your nest egg investments compound. So think about it, as money comes in, if you value these things here more than you value spending money on other depreciable assets, the money's going to come in to your bank account, and your investment account, financial institution account, is going to compound. It's not going to leave. There's not going to be any money that's necessarily leaving. It's going to get compounded and reinvested because you value those action steps more. So what I encourage every trader to do is to set up some sort of a savings account. So the moment money comes in from a payout, instead of going and blowing that on a new watch or a new car, you can save a portion of it, at least 10%. And then once you build up a nest egg of maybe 3 months cash savings, you then invest whatever goes above that 3 months cash savings. And you invest a portion into income producing assets. And then you watch that compound, you watch that grow. And then of course, you're going to be saving a portion of your income. You're also going to have a little bit of expenditure, right? But most people don't have this. They don't have the value on the saving and the investing. And you want to start to raise the value of that. You want to ask yourself, how does me doing that, how does that contribute to my overall vision as a trader? And how can I have an investment account that continues to compound? And what's the vision behind that? What's the reason why behind that? So I can see the value in doing it, and so that I can consistently build that nest egg and that investment account, and then eventually that's going to be used for something. Maybe it's research purposes or some form of philanthropic pursuits or some sort of business or some sort of building out a family, generational wealth in your family, whatever it may be. But you want to see the reason why behind that so you can raise the value of it. But the point of today's video is to show you that human behavior and the human behavior behind spending, you're always going to spend money according to what you value. So it's wise to value the action steps that keep money in your account, keep money in your pockets, and keep it compounding. Most traders stay poor because the moment they make money from their edge and they get paid from a prop firm or they get paid profits, whatever it may be, they go and spend it on something else they value more, like a watch or something like that. And that's fine, you can do that too, but you always want to make sure there's a portion of your income going into savings and into income producing assets, and you watch that reinvest, you watch that grow, so that you have something there for yourself and for your bigger vision. Okay? Now, if you found this useful, share it with your trading communities and share it with your trading friends. This is an understanding that most traders do not have. And if you're enjoying this series, share it in your trading community. And if you haven't already, make sure you do the trading psychology quiz. That's a free quiz which is going to show you which of the trading mindsets you have and exactly what you can do to get from where you are to consistently profitable. Okay? I look forward to seeing you all tomorrow.